Today, we're talking about, and I love the fact that they're able to put a press release saying remarkable in the headlines, especially when talking about a junior mining discovery. Pretty incredible coming out of the gold digger property.
They see a lot of visible gold here, and that's not really a big surprise, because if you look, way back to the first season, I think they drilled was 2021, and they did metallurgical work shortly after that because they did see a lot of visible gold in holes. They took my advice. They did a round of metallurgy, I think, in late 21 and early 22, and then they did another one in late 22 and early 23. And both rounds of testing, just hands down, demonstrated absolutely fantastic recoveries. The metallurgical results to date speak volumes about the very high quality.
You'll remember Dr. Quinton Henning was on a few weeks back, and we see great movement from both of those companies being received exceptionally well. We've been working with Goliath and own shares of Goliath for years and years. We believe in this story. We believe in the syndicate and the entire team that they've amassed. The big news, not only from back at the conferences, was the drill results, which were incredible, and we're waiting on a ton more. It was yesterday's announcement from McEwen Mining that they are coming in for, I think, 3%, so 10 million. And that is significant because, once again, you start attracting the likes of the Dr. Quinton Henning, Rob McEwen, all these kinds of names into your deal. People take that as a sign because you're attracting savvy mining investors that have done very well in the past. Certainly is information on our Substack, and I mean, there's a myriad of interviews that you can go through over the years where we've expressed our excitement as to what they were developing and they continue to develop. Part of what we do is we let people know companies that we love and we like. It's how we've done really well in the past. It's in part, we got to work with Great Bear years ago. We had great success with that. We have a framework, like a model that we use, and we have a network that we use. And that's a lot of the hard work and heavy lifting, is being able to rely on a lot of smart people and their expertise. That goes a long way. And we make sure for our subscribers that we're doing that. We're identifying risk. We're explaining the asymmetric possibility, really putting timeframes into perspective. Once you get some of these big players getting involved, as you would have saw with Great Bear, is people coming into the deal at different sections, adding more, I hate to use sort of credibility, but certainly adding a lot more flavor whenever you're getting further acknowledgement from mining billionaires and major investors saying, yes, we're acknowledging that you have something here. We want to let people know about that. Usually we keep that just for our subscribers, exactly who and how much we're buying. But we've been pretty vocal about those two. Hey, everyone. Welcome to today's show. Today, we're talking about when gold's going to hit 3,000. Of course, I don't know exactly the date, so that was a little bit of clickbait. But I think if one was to look at the momentum, if you looked at just the last month chart, which looks like amazing, we're very, very close. I mean, today we're peaking over 2,900 again. That's a great sign. Could it do it within a month? Yeah, we could, certainly. It's always hard to peer into the future, but regarding the long term, there's nothing changed in the all the narratives, whatever narrative you wanted to follow regarding gold moving forward. And that's under even the highest appreciation of what's happening in the States, or if you don't like it, or uncovering things like that Doge is uncovering and what your thoughts are on that may cause gold to up or down. All of it, whatever is found out, whatever is discovered, we're just finding out things that the market has largely kind of focused in and known about and priced in, I think, to a large extent. And the case for precious metals, there's nothing that I see in any news event, in any kind of fundamental acknowledgement, economic, monetary, that suggests it won't have another stellar year. And we can look at a number of different factors here that we usually kind of talk about, and certainly it's in our Substack as well. So do we see increased gold buying? Yes. Now, especially, we just went through the Chinese Lunar New Year. That has a big benefit. It usually tends to increase to some extent. This year was certainly it was very visible in that. But on top of that was the fact that the Chinese Communist Party had allowed the insurance market to come in. That's a big step. So them, once again, allowing them, that could add about 27 billion in buying, since they're allowed to now put money into that into the sector. They'd always kind of restricted insurance funds from investing that in any asset that didn't offer a stable cash return. Yeah, sure, fair enough. That's always the argument against holding gold, is that it doesn't give a dividend. We need to see some sort of metric that has a cash flow coming from it. Okay, that's fine. I get it. Certainly, anybody who invests in gold would argue that isn't a great decision, and certainly all of those that have for decades who have owned gold and told people to own gold can clearly point out that their strategy has been exceptional. They haven't debased their wealth, and right now, the more people see those people who for decades have been chiming in saying, listen, this should be part of your asset, it should be part of your portfolio, they're having a great time. They really are. And I'm more than happy to keep on pontificating that, because we own some, but it also shows that I'm not trying to push any product that I have or anything like that as well. It's promoting mining in general. And there's plenty of bullion dealers you can go to, and we have no problem listing ones on our Substack as well if you have any interest. We have no relationships with any, but it's something that you should absolutely be talking to your financial planner, your analyst, consultant, whatever you have to discuss. Should it be a small portion of your portfolio, or perhaps a larger portion of your portfolio? This is the time, and we see even in the ETF growth in China that has grown quite a bit. And it's not sorry, I'm having a bit of a hard time with my voice today. On top of that, we see a lot of the issues with tariffs down south as being certainly a big issue as well. And once again, avoiding all the political rhetoric, which is exceptionally difficult, right? And it's an unfortunate thing that we have media that won't report things fairly, and that is a frustration. Is that if you look down at this down south, say for example, regardless of what anyone thinks about Elon Musk or the administration or anything like that, to have someone go out and basically forensically account for the government and spending, that should be something everybody should be applauding. Everyone on all sides. That should be something to see. Yes, can we run this a bit more efficiently? Now, I would say that should be unobvious, but it isn't if you are of the leftist persuasion. I don't mean that you're liberal. I mean left, like you're far left. Even whenever I was doing my economics and political science degree way back when, I took this course on public administration. Oh my God, you'd think that's so boring, but it was fascinating. Because the professor had been a bureaucrat for a long time, and he summed it up pretty simply, in particular for Canada, regardless of if it was a conservative, a liberal government, didn't really matter, was that there was zero benefit to run your department efficiently. Say you got a budget of $10 million. If you could run it for $7.5 million, you weren't going to get a raise. You would be actually in trouble, for doing that to save money. And you go, well, why would that be? Shouldn't this be run like anything else? If you did that in a company and you cut costs and efficiencies, you get a promotion. They'd say, hey, listen, here's a bigger piece of the pie. Solve this problem now. It isn't. It's the exact opposite in government. Is that he would account for departments saying, well, we could do the job for 7.5, but we're going to spend 12. Even if it means we're ordering brand new computers again. We'll just order them and we'll have them sit here. And now you can take that, for what it's worth. But because the government would look and say, oh, we'll give you less next time. You're able to run this. That means I could take this and put it into someone else's. You're doing a great job, though. Way to go. So they would always spend more than they could and then 15% up that again to ask for more again. So they'd be asking for 13.5 or 14 the next year, even though they can do the job for 7.5. And that's an unfortunate system of bureaucracy, and it's easy to spend, and you're seeing it, and that's the reason why there's a vested interest by a significant portion of the population to not want that kind of investigation. Why would you? They're going to find out that probably a significant portion of jobs are redundant. Now, what does that mean for gold? Well, it means that there's a lot less confidence as more people become aware of how the system works. And not to get into a big, huge kerfuffle about economics, monetary policy, and whatnot, but generally speaking, the government is the number one employer of jobs that really don't need to be done. And in part, the further left one goes, that's your way of redistributing wealth. As you say, we're going to increase taxes so that we can apply more people to do redundant jobs. And that's why you see in countries that are really far left, people sitting around doing nothing, 8 people for one job, because that's your best weapon of equalizing and flattening out any merit that the ones that are doing all the work are paying for a lot of other people. And then their idea of lifting up society is to bring it down into a lower middle end, or usually it's a sharp drop in standard of living, but more people live off that. And there's a vested interest for either side that the more government power, the more influence, it would either be that they can run their businesses and divert funds through the government, or people would argue that if it's a right-wing government, that they are going to go give contracts to their buddies at XYZ energy company and get a kickback and a payback. So once again, don't make it seem like I'm picking on one more than the other. I don't think anyone would find it too controversial to say that there's lots of shenanigans that go on in government on all levels. The interesting fact that is facing today is why the mainstream media is so vehement that no, Elon Musk, and regardless if it's Elon Musk, put anyone in there, I don't care what name you put in there, they're evaluating where all this money is being spent because they're being caught out. And once again, who cares? What does that mean for gold? Well, it means that people are once again paying to a lot of the financial issues and duress that the States is actually under, and it's being reported or purposely misreported. And we've been talking about it for quite some time, that there are just significant issues that both sides have to acknowledge and stop playing the politics game. I'm not under any illusions that's going to occur. Both sides are very active on that. And we're facing further stronger tariffs from the U.S., which is also it isn't very helpful. It's hard for me to have an opinion other than just take it for what it's worth. Is that I still kind of think that Trump comes from a business background, and the best way to negotiate is hard. And the U.S. usually negotiates hard and with threats and aggressively. And I think that's what really, at the end of the day, is happening, because when you're talking about energy and mining, and so include gold into that, there's no he's under no illusions that Canada isn't worth a phenomenal amount of money with resources in the ground. Now, whether you can get that or not, that's another ballgame. But I think that's also that reflection of, will we have an administration that actually will try to get some of this wealth out of the ground? Currently, it's a no. I would argue that there would be very, very highly unlikely that Carney, since he's just kind of a replicant of Justin, would do the same. I would wish that maybe if he has a chance at winning, that he would say, yes, we have a significant plan for getting these resources out into the market efficiently and effectively. I haven't heard that. So I would think it would be, the same plan that's been given to Justin will just be planned out for Carney as well. I would suspect. But I don't think we have to worry about that, because I think we're getting a new government, and that government will hopefully, and I hate pinning lots of hopes, but hopefully change some regulations. And people will remind me as well, and it's fair to say, that just because you have one government come in and change some regulations doesn't mean the next one 4 years later can come back and rechange them again. And that is a significant problem when you're dealing not with tech, But when you're dealing with mining and you're dealing with, say, with gold companies or critical battery metals, is the lifespan of trying to find something to get a mine built is not 4 years. You can't get a lot done. You could significantly get quite a bit done if you really ramped it up, which I don't think any country would. I don't think you could even. But it's interesting when you look at comments that the big tech bros, like the billionaires, or engineers that work for Google and the magnificent, wonderful seven, they'll say things like, "We don't ask permission; we simply do it, and we do it at scale. We don't care if there's privacy laws we're breaking. We don't care about any of that. We're going to do it to such a scale that we'll then ask for sorry at the back end." And that's kind of I'm sure you've heard that type of saying growing up, is just take action, ask for forgiveness later. That strategy has worked for them because you can get such scale. That might be what needed here as well, is that you just advance projects so rapidly and so quickly before all the lawsuits come out that can stop them. Now, the lawsuits seem to be able to work fairly well against other sectors. They don't stop tech companies. I mean, everyone knew all the privacy concerns right from day one with Meta, Facebook, and they get found guilty constantly of different laws breaking. It doesn't stop their growth, though. It doesn't stop people investing in them. The big issue and the obvious issue there is that, well, people enjoy their products. People don't know they enjoy mining, and that makes it that it's easier to stop. And also, it's a tougher business. It's an uglier business. It's a dirty business. So it's less likely that someone's going to be informed on it, and much easier for a judge to think, oh yeah, I'm going to look a lot better trying to stop this than attempting to stop any major, Facebook or Nvidia from mass producing something at this rate, or OpenAI, advancing AI like with limited restrictions. That narrative is a lot harder to decide to champion against. You're going up against momentum that is far too great. A little bit easier whenever you're dealing with critical metals or mining for gold or any of these other fundamental sources of wealth. But maybe we're coming around. More and more people are understanding and realizing that we are a natural resource country and that we need to have these things, and that especially on the gold side, a lot of people don't love the crypto story. I mean, a lot of young people like it, hey, and I get it, but a lot of other people, a little bit more foundational, maybe a little bit older, they look and go, you know what? I get it. I like the story. I like the ideology, but if I can look at something that's historical, and also I could just look at like federal banks, like and countries, if they're all buying gold and repatriating gold, maybe I should be doing that. And to me, I always view looking at a company or looking at a politician or looking at a friend is that you don't judge them by what they say, you judge by action. That's going to tell you all you need to know. So looking at who's buying and why they're buying, to me, is one of the best measures of money flow and where it's flowing from to strengthen your resolve and where you're also investing. And once again, do I think 3,000 is going to hit 2025? Yeah, I think. Once again, I hate to tell the future and whatnot, but I think everyone would say that's a foregone conclusion. Now, will it stay there and keep pushing past? I think there's a very strong chance of that as well. I think by spring we could hit a 3,000. And I'm no chartist. I look at charts vaguely, but I don't have an expertise that way. But if you certainly look at that 1 month chart, boy, even not having a lot of weight of energy into charts, it's hard not to look at that and go, ooh, that looks pretty good. And people are waking up and they're paying more and more attention. And it's funny because even just looking at a ton of YouTube channels that I might like to listen on my free time, a lot of them mention gold now, like ones that I'm shocked and surprised that mention gold. Go buy from this bullion dealer and whatnot. So they're finding that they they like that message as well. And so it's a very interesting crowd that we're seeing from streamers, and I mean like big streamers. I don't mean little old me. I mean like people who have like 3 million, 5 million followers, that type of thing, where they'll mention, yeah, I've got a relationship with XYZ bullion dealer. Go use this code for a discount. That's very interesting to me. And if you're a more lefty person, to me, it would be obvious at this point that you should be buying gold, because if you don't have faith in the U.S. system and you think that Trump is going to destroy everything, you think that there's going to be massive inflation, you think that all of these things, then gold should be surging. You should be in there with all of your convictions that things are going to get destroyed and be buying gold. And even if you think that he's going to solve all the problems in the year ahead, I would say that still, even having a plan that could solve the problems doesn't mean you have to realize and acknowledge the significant problems that are there. So gold is going to look spectacular moving forward. And, we can't reiterate enough that you should definitely bring it up with your advisor. And also, I will mention a couple of quick things here before moving on and letting everyone go today, is that Barrick had... they announced, sorry, I'm just pulling it up right now. Yes, 70% surge in fourth quarter earnings, surpassing their estimates. They announced also a $1 billion buyback program. Now, that's actually a good strategy. I know I'm a little bit hard on Barrick sometimes because of the situation in Mali, and that is maybe getting better. I don't know. I don't think I don't hold a lot of hope in there. But they did. The shares have gone up a little bit here. They doubled its free cash flow in the quarter. Off of strong, obviously, on strong gold performance. They were repurchased about $500 million in stock last year, and often you go, well, that's great. They put the cash flow back in by buying stocks, propping up the share, helping support whenever. Obviously the Mali situation would be very detrimental. It's good to see that they were in buying up more stock. And I would say, even if your one is a smaller producer, if you're not paying out a dividend and you don't have a huge growth story, yeah, buying back your stock, it rewards your investors very well. We saw Kinross. They came out on the 11th. So yesterday, strong earnings, significant earnings per share growth, higher production, obviously off of great gold prices. Agnico Eagle, they analysts predict about 109% rise in earnings. Now, that's coming out today, as well as Alamos Gold, Royal Gold, then Newmont on the 20th, Anglo Gold Ashanti on the 18th. So we'll be watching that, and Gold Fields on the 25th. We're going to watch that to see what the numbers look like, what their all-in costs are, if they're improving. That's a big factor that people want to see. They want to see, listen, are you able to cut the cost down a little bit? Can you do this a bit more efficiently and effectively? Evolution Mining out of Australia hit 4-year high after profit beats estimates. They have done exceptionally well as well. And one last thing I want to drive home here, because people, I've been hearing this inflation argument back again, and there's a very high probability of things getting much more inflationary, especially with all the tariffs and whatnot. But they keep on pointing to eggs. I'm keep on scratching my head. Why is it they want to, why are eggs so expensive? Why are eggs so expensive? Well, eggs are not, they're not expensive because of quote unquote inflation, because of money supply issues. They're expensive because since 2022, the past administration killed 100 million egg-laying chickens. 100 million. So I asked ChatGPT, listen, what does that mean? So egg-laying hens produce about 300 eggs per year per hen. Removing 100 million hens would mean a loss of 30 billion eggs per year, 2.5 billion eggs per month, a dramatic decrease in supply. So that's just for eggs. So yeah, you're buying eggs, but now consider bread, pastries, pasta, mayonnaise, everything that uses eggs. So are things going to get more expensive? Yeah, for sure. Now, of course, they say 58 million chickens were destroyed in 2022 alone because of the bird flu outbreak. And I think it was another 20 million back in December. So No, it isn't because of inflation. It's because whether rightly, wrongly, whatever your position is, that's why. And this is what annoys me about a lot of media, is that instead of everyone just saying, listen, call out people for things that you don't like politically or socially, that's fine. But don't start messing in finance, economics, and actual numbers and being misleading that way. That's very frustrating and annoying. Stick to politics stuff and the politics stuff, and leave the economics and the financial stuff alone. That's my take as far as media is. I wanted to throw that out there because it's very frustrating when you see things like that, and it goes right in that misinformation category, or certainly misleading, and that doesn't help anybody. And in these situations where there's lots of chaos, there's lots of stress out there, people need access to true information, and hopefully as unbiased as one could, which is also exceptionally difficult. Once again, I'm not under any illusions that people don't have bias, but if one could possibly just remove themselves from the inflammatory, situations that we're in right now, worldwide, and just think, okay, what should I be doing just for myself, for my own portfolio, for my own money, to give myself the best shot. And the best shot right now is continuing to be looking at gold, to be following all sorts of people that talk about gold. And not just me, there's tons of people. We have them on quite often, and you should be checking them out as well and get their perspective. And also talking to, once again, that advisor of yours and asking them, why aren't they talking about this more? Should this be part of the solution moving forward? That's it for today, guys. I mean, lots happening in gold. I was talking to a gold bullion dealer on LinkedIn that reached out and just said, like, listen, it's been like wild since 7 to 8 years now that we started first talking about gold. Back, and I did actually have a relationship with one gold company here in town, and gold was at 1,100. And I was chatting with all sorts of people saying, hey, put this on your radar. And I mean, very little interest, let's just say, very little interest. But you look at now and you go, it's almost at 3,000. That's shocking. And this, once again, when I was young, I didn't care. I couldn't even tell you what gold was trading at. I mean, I think I remember at one point in the 80s, because my parents had bought gold at 300 or something like that. But it was not something that was really on my radar. And that's someone who had a financial background, had a risk management background, loved the equity markets, had a brother who was into derivatives and options, and had a fund, and just no interest. So I get it that that people are like, I don't have a strong interest, but one should. And listen, the numbers don't lie. And moving forward, all the numbers, kind of hinting at what's happening in the future, they aren't lying. And that being said, there's a lot of great companies out there that are having lots of indicators of strong success, of finding things with great assays in great geological settings. Lots of hints that if one is really into this sector, could also be positioning themselves for getting asymmetric gains, like much greater gains. There's a number of them out there. Join us on our Substack to find out which ones we love and which ones we like. And enjoy the rest of the week, everyone. Also, I guess have a good Valentine's Day on Friday. We might be doing a show. I might see you then as well. But otherwise, enjoy the rest of the week. Lots happening out there, and keep focused on what your plan is. Keep that mindset sharp and strong, and try not to get distracted by all the chaos and craziness, and think, what is it that you can do to better not only your own day, but that of your friends and families, make it a bit brighter, and how could you become more financially secure and deal with all these shocks that are happening to the system. All right, everyone, all the best. We'll talk to you soon. Take care.